Hi, welcome to our update from Trendsignal for the week starting the 19th of August. Pretty torrid time on the markets last week. In the end, equities were sharply lower, certainly in the States, off 344 points on the Dow, which is, 2.25%. FTSE was off 84, in the end down 1.2%. Markets fell quite sharply last Thursday. Today's Tuesday. Already we've had some negative numbers out from stock markets yesterday. The Dow is actually down for the fourth day in a row, which is the first time it's had 4 consecutive losing days this year. So we can see what the effects are of the fundamentals, and the fundamentals mostly being this sharp rise in bond yields, with the price falling quite sharply on treasuries, bunds, gilts, etc. The effects of the Federal Reserve's quantitative easing, tapering, the reduction in the amount of asset purchases is having a fairly dramatic effect on bond yields, which are in turn having a dramatic effect, or quite a dramatic effect, on emerging markets, as emerging markets fear the removal of dollars and investment in those countries, sparking some fairly sharp falls. This is an article from the FT, and we've seen some fairly sharp moves across the board in the likes of Indonesia. At one point down 5.6%, ended up 3.2% down, but the cracks are starting to show, and everything really focuses on these rising bond yields that we've talked about already this year. In the last 3 weeks, the US 10-year government bond, that's now yielding 2.87%, I should say. That's actually 0.25% higher on the week, and a fresh 2-year high. All this matters obviously because it pushes the cost of borrowing up, not just for sovereign nations but also for corporates, as well as corporate bond yields track sovereign debt. So the ripples have been felt far and wide from this discussion about Fed tapering, whether it's going to happen, to what extent it's going to happen in September. Let's have a look at the data coming out this week. We're already into Tuesday, as I said. Very light calendar for this week. Really, the data doesn't really kick in until Wednesday the 21st, that's tomorrow. We start really with the first sort of major bit of data, which is existing home sales. Home sales are important in the States. They create, each house has the potential to provide work for up to 5 people, so the statisticians tell us. So existing home sales very important. New home sales, all data on home sales is important, as it indeed is in the UK as well. We have in the evening the release of the minutes from the Federal Open Market Committee meeting, the rate setting committee for the central bank in the States, the Federal Reserve. Not expecting too much there. I don't think expect to hear any sort of major disagreements or anything, so not sure that'll have any effect really. But if you are trading at 7 o'clock in the evening on Wednesday, please watch out for that. Then we have this first independent report this week on the Chinese economy. We had some updated, more positive data released last week on the Chinese economy, albeit from the state organisation. This is from HSBC, which is very much an independent organisation, and they are saying that we're going to have a slight uptick in the manufacturing PMI, albeit still below 50, still contracting. That number will be closely watched. Thursday morning we'll have a pretty good idea. The effects will be felt quite sharply, I suspect, in the Aussie dollar, the Canadian, and to a lesser extent perhaps the Japanese yen. And then we have really a raft of data on manufacturing across the whole of the Eurozone. The key ones, French and German manufacturing and non-manufacturing or services PMI. The overall data, we're looking for manufacturing across the Eurozone to be up further from the 50.3 reported last month to 50.9 is the consensus. Services again up from 49.8 to 50.2. We then have the weekly unemployment claims. The general improvement in unemployment claims persists, looking for data around 329, slightly up on the previous week, but the trend is downward. And then we do have something called this Jackson Hole Symposium. This is a meeting for central bankers, all the great and the good, and the central bankers, major bankers across the globe. They meet in the US. It is not attended by journalists, so there won't be any direct reporting, although various messages and reports leak out, so that there's a potential to perhaps move the markets a little bit. It's over 3 days ending on a Saturday, and then finally on Friday we have our second estimate on GDP for the second quarter in the UK, previously reported at 0.6%. We're not expecting any changes there, although there are rumours of a slight uptick in that. And then finally on the day, new home sales in the US. Again, as I said at the beginning of this piece, home sales very important in the US, along with consumer sentiment numbers that we've been seeing slightly under pressure just recently. But let's see how new home sales are performing, and that will have an effect on the US dollar and equity markets at 3 o'clock on Friday. That's it for the week. We do actually reconvene again at Trendsignal for our workshop on Thursday at 8 o'clock. Look forward to seeing you then. Thanks for listening. Bye now.
If you would like more information about trading the right way, Trendsignal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trendsignal website for the latest events and to book your free place.